What's up guys, Trevor here. Welcome back to another video. In today's episode, we're going to be talking about how setting up a Roth IRA can make you a tax-free millionaire. Let's get into it. Thanks so much for taking the time to watch this video, guys. My name is Trevor, and I talk things all stock market related and personal finance as well. So if you get any value throughout this video today, please consider hitting that like button for me, and please consider subscribing. It would really help out my small channel. So today we're going to be talking about all things Roth IRA. This is something that I wish I would have learned literally in high school, but no, I learned it on, I don't know if you can see this shirt, University of YouTube. I learned it on YouTube like 3 years ago, and now being on YouTube, I personally believe it's one of my biggest responsibilities is to share with you guys what a Roth IRA is. Those of you guys that take the time to watch my videos, I definitely want to bring this to your attention so you can make a decision if you want to open up a Roth IRA or not. So this is going to take some time, not actually setting up the Roth IRA, but the investment vehicle itself is not a get rich in the next week, in the next month. It's a long-term, it's a retirement account. So with that being said, this is going to be the layout for today's video. We're going to be talking about what is a Roth IRA. We're going to talk about some of the eligibility requirements that I believe you should personally know. We're going to talk about how to set one up. I'm going to break this down and show you how to actually set up a Roth IRA. I'm also going to explain to you what you can put inside of your Roth IRA. And lastly, I want to talk about why you should have a Roth IRA. We're going to run through some examples towards the end of this video. Now, I don't really say this on all the videos that I do. This video in particular, it's very important that you guys actually watch all the way through, because if you miss a certain section in this video, you may not know if you're eligible to open up a Roth IRA. So try to watch this video all the way through if you can. Let me know if you have any questions while we go through it. And also be aware that I'm not a financial advisor. I just love talking about this stuff on YouTube. So before you do any big investment decisions, definitely make sure you consult with a professional. So with that being said, let's get into this. Okay, so you might have heard the term IRA before, and it's important for you to know that there are two main different types of IRAs that you probably have heard before, and that would be the Roth IRA and also the traditional IRA. But today we are mainly going to be focused on the Roth IRA. So the Roth IRA is just an account. It's not an actual investment itself. Many people mix this up. Meaning if you open up a Roth IRA but you don't put anything into that account, you don't actually get a return or anything. The Roth IRA is simply the account. Think of it as like a checking account. A checking account is there in your bank, but unless you put money into it, it's not really going to do much, right? So with the Roth IRA, you actually have to open up the account and then funnel investments in it for it to be productive or for it to be effective. So looking at the term Roth IRA here, let's break this down briefly. So think of the term Roth here as paying taxes up front when you contribute to this account. So this allows individuals like you and I to invest post-tax money into this account and allow it to grow tax-free. So this is called post-tax money because in most cases, you've already paid taxes on the money that you earn. If you get paid every 2 weeks, if you get paid every month, you're a W-2 employee, you've already generally paid taxes on that money that you get. So investing that money where you already paid taxes and investing it into a Roth IRA, that's what's called post-tax money. Now moving on to the IRA. The IRA stands for Individual Retirement Account. So in very simple terms, guys, this is what the Roth IRA is. It allows you to invest post-tax money into this account to grow tax-free. So a very important section of this video is going to be the eligibility requirements for a Roth IRA. Now understand that this might change depending on when you watch this video. Right now we're in 2020, so I'm going to talk about the 2020 eligibility requirements, but also understand that I'm not a financial advisor or expert with this stuff, right? I'm just a guy that's trying to get you to open up a Roth IRA for your future, so think of it that way. So for 2020, the total contribution limit is $6,000 for individuals and $7,000 if you are over the age of 50. Now notice here that last bullet point says your taxable compensation for the year if your compensation was less than $1 a limit. Now what that means is if you made $4,500 from a job, right? You cannot invest more than that into your account, even though the limit is $6,000 for the Roth IRA. So unfortunately, yes, there is an income limit with the Roth IRA, and I actually learned this a while back from Dave Ramsey. So I'm going to refer to his website here to kind of give you a better explanation of this. So if we take a look at this article here, it says if you are filing single, according to the IRS, single tax filers must have a modified adjusted gross income of less than $124,000 to contribute the maximum of $6,000 and $7,000 if age 50 or older to the Roth IRA. Now there's also something called a backdoor Roth IRA as well, and this is mainly used for people with high incomes to sort of sidestep the Roth IRA income limits, but we can talk about that later in another video, or if you guys would like me to make a video on that, I can certainly do that as well. Now that annual contribution limit of $6,000 per year works out to be $500 per month. So personally what I do, guys, is I have an automatic transfer from my bank to my Vanguard account, which funds my Roth IRA. So $500 per month automatically, without me knowing, goes into my Roth IRA account, right? So This can be a lot of money, especially if you think about it, right? $6,000, but if you break it down to $500 a month, when you start to see that the average car payment in the United States is around $554 per month, and you start tracking your finances and you start seeing what you're spending, you might realize, hey, this is actually more possible than I thought. And no, I'm not telling you you have to sell that car, but I do want you to look at it from this perspective, right? The opportunity cost of Americans on average paying $554 for a car payment when they could be investing $500 a month into a Roth IRA. It's just pretty crazy when you think about it. Okay, so those are just some of the basic eligibility requirements for the Roth IRA. So if you're still interested, now I want to share with you guys how you can set one up. Okay, so first you have to create an account with a brokerage. I personally use Vanguard and I will use that for my example, but I am not sponsored by Vanguard. I'm just sharing with you guys what I personally use. So if you end up deciding that you want to use Vanguard, after you sign up, go to this tab under investing and then go under account types. Then you're going to click on IRAs and you're going to go to Roth and Traditional. And then on the right hand side, you will see the button Open Your IRA Today. It's that easy, guys. You just answer some questions and then you are all set. Now, if you want to read more about this, they list some of the reasons why you might want to open up a Roth IRA, and they also list some of the eligibility requirements that you must have as well. So again, Vanguard is not the only brokerage where you can go and open up a Roth IRA, but it's the one that I personally have my Roth IRA in, the one I'm most familiar with. Again, I'm not sponsored by them, but it's the one that I like the most. Okay, so far we talked about what is a Roth IRA. We talked about some of the eligibility requirements when it comes to opening up a Roth IRA, and we also talked about how you can open up a Roth IRA, how to set one up. Now, what are you able to put into a Roth IRA? You can add investments like individual stocks, ETFs, index funds, mutual funds, and that's just to name a few. Now, what I do personally, guys, is I mainly invest in index funds in my Roth IRA. While I have some individual stocks in my Roth IRA, I really make sure that I contribute a lot into index funds. The reason that I like to have more index funds than individual stocks in my Roth IRA is because right now I'm 22 years old. I'm planning on holding this Roth IRA for like another 35 years. With individual stocks, I'm not sure what companies are going to be around, how companies are going to do from a 35-year perspective. Yeah, I'm a long-term investor, but it's hard to pick stocks when you're looking at 35 years. A lot can happen until then, right? So when you look at the history of some index funds and the average return that they've experienced over the past 50 years or so, right? We can expect an average return of anywhere from probably 6 to 8%, right? So when I'm opening up my Roth IRA, I want it to be a passive investing strategy, meaning I don't want to be actively managing my investments within my Roth IRA just because it's so long term. With my Robinhood portfolio, yeah, I'll actively manage my investments because that's what I want to do in my Robinhood portfolio. But with my Roth IRA, an account that I'm not going to be touching literally until I'm 59 and a half, I don't want to be super active on there. I'd rather buy and hold and track the overall market as opposed to trying to beat the market and hold for the next 40 years or so, knowing that my investments, I'm not trying to necessarily beat anything. I'm just tracking the overall market and getting that average 6 to 8% return. Now, some of the other reasons that I really like to invest in index funds in my Roth IRA is they have a low expense ratio. Some people have actively managed mutual funds, but I personally believe that those fees are way too high, and I highly recommend that you guys read this book by John Bogle titled The Little Book on Common Sense Investing. It really changes your perspective on index funds and actively managed mutual funds. So, low expense ratio, I really love that. Second reason is you just track the market. You're not trying to beat the market, right? I just told you guys about this from a 35-year perspective based on my age right now. I don't really want to try to beat the market in the Roth IRA. Yeah, I have a couple individual stocks in there for fun, but I really want to make sure my portfolio in my Roth IRA is really just index funds that track the overall market, because over the long term, I am satisfied with getting that 6 to 8% return on average in the stock market. And the last reason is you're getting solid diversification, right? It doesn't just have to be American companies. I can go into foreign markets as well if I'd like to, but you're getting solid diversification, a broad exposure of a bunch of different stocks over the long term. So those are just some of the main reasons that I like index funds into my Roth IRA. Now, you can put actively managed mutual funds in there as well, but I personally stay away from it just because of that high fee. So one of the main things that I really like about the Roth IRA is you can customize it to your own investments. You can put whatever you want into it, right? You can design it yourself. You can allocate certain investments that best suit you and your portfolio. Now, this depends on a variety of different factors, right? Like your age, your risk tolerance, and how much capital you have to put into this account. So definitely make sure that you take that into consideration. Now, lastly, I want to talk about why you should have a Roth IRA in my personal opinion. And I'm going to share with you guys an example in just a second, but here are some of the main reasons I could think of right now. The first one is tax-free money. Okay, we talked about this. Roth IRA means you're putting post-tax money into this account first, right? You fund this account with different investments and you're investing your post-tax money. and then you allow that money to grow until you're 59 and a half. That's the minimum age where you can take out all those investments tax-free with no penalties. So if you use the Roth IRA correctly, it can be an amazing tool to take out a lot of money tax-free. So the second reason is you can withdraw the principal. So let's say you don't have a Roth IRA right now. You open one up tomorrow and you contribute $1,000 to it. And a year and a half later, right, let's say that account grew from $1,000 of your initial investment and it's now worth $1,500. Well, if you decide to take out that $1,000 of your initial investment, right, your account now is worth $1,500, but you take out that principal of $1,000 before the age of 59 and a half, you're allowed to take that with no penalties. The only thing you cannot do is take out that $500 of profit. You would have to pay a lot of penalties if you did that. Now, the third reason is compound interest, and this is why it's so important that you can start as soon as you can. The earlier you start, the more you have time to build all that compound interest, right? And it's a snowball effect that takes a lot of time, but the earlier you start, the more that you can experience the benefits, the amazing benefits of compound interest. And that leads me to my last point, which is if you are a dividend investor, this could be a great way. If you're trying to retire at 60 years old and you want to live off dividends, this can be a great way to not pay taxes in dividends. You're allowed to grow those dividends tax-free. So let's say that you want to live off dividends and you invest all in dividend stocks in your Roth IRA. All those dividend payments, if you keep reinvesting it, eventually you can take out that retirement, or you can take out that money from that Roth IRA and live off those dividends. So I think those are amazing reasons those are just some of the amazing reasons why I think you should personally open up a Roth IRA. Okay, now lastly, let's get to the super exciting part, which is examples on why you should open up a Roth IRA here today. So suppose you just set up a Roth IRA and you are 18 years old and you add $6,000 to your Roth IRA and plan on taking it out by 60 years old, leaving you with 42 years of growth. And let's say the average rate of return is around 7%. You can expect that addition of $6,000 a year for 42 years to be worth a total of $1,480,658.98 tax-free. Now suppose you wait just 2 more years and you start when you are 20 years old. You still start with $0 and you contribute that same $6,000 per year, but this time you only have 40 years of growth as opposed to 42 that we had in the previous example. And suppose we have that same rate of return at 7%. Our return will come out to be $1,281,657.42 tax-free. Now notice the difference here, guys. They contributed the same amount with the same rate of return. The only difference was one of them started 2 years earlier, and there's a difference of $199,001.56, which is tax-free money. So am I saying that you have to contribute $6,000 every single year? No, I'm just simply letting you know that's the maximum that you can contribute, but I would definitely recommend trying to contribute something. Now, one of the ways that you can figure out how much you want to contribute, you can go to this website here that I'll link in the description. This is a compound interest calculator, and when I was designing my Roth IRA and setting it up, I found this tool to be very helpful, so you might find some value in it as well. So thank you guys so much for taking the time to watch this video. I hope you have a better understanding of what a Roth IRA is, and I hope that you consider opening up an account, whether it's with Vanguard or with another brokerage. I think it's super important that you guys start this today. So if you guys found this video at all helpful, please let me know in the comments. This is my first couple months on YouTube, so I would love to have any feedback that I can get from you guys. If you got any value from it, please hit that like button. Please consider subscribing to my channel. I would love to have you part of my journey. So thank you guys so much for taking the time to watch this video. I post videos Monday, Wednesday, Friday, and Sunday, so I would love for you guys to be part of the journey. Also, feel free to follow me on Instagram. I go live twice a week. I talk about all the questions that you guys have, answer any questions that I get on my live streams, and would love to have you on there as well. So thank you guys so much for taking the time to watch, and I'll see you on the next one.